In previous videos, we have redeemed our bonds on the maturity date. So we have redeemed these bonds and paid them the amount that we owe them. There was no gain or loss on the early redemption of the bond. So now we're going to look at what happens when a company issues what we call callable bonds. What this means is we have the right to call them or redeem them before the bonds actually mature. If our interest rate drops and we don't want to pay the higher interest rate on the bonds, then we may choose to redeem them early. Or if we have extra cash and we just don't want to incur that interest expense any longer. In this situation, we may choose to call them earlier. Okay, so you would have to be given some information, the balance in bonds payable, either a discount or a premium balance, and the amount you're going to redeem them for, or the percentage of the amount you're going to redeem them for. So here, if you took your percentage, 0.975, and times it by the bonds payable amount, we would redeem them at $975,000. Keep in mind that this is a percentage. We're redeeming these bonds at 97.5% of the carrying value. So when you multiply, you have to change the percent to a decimal by moving the decimal 2 places to the left. So to calculate the gain or loss from the early redemption of bonds, we're going to put our information into this table. So you will want to memorize this table. So first we have bonds payable, which is $1 million. And then it's going to be either plus a premium or less a discount. So our discount is $10,000. Since it is a discount, I'm going to put it in as a minus. And we already know that our carrying value is our bonds payable plus our premium or less our discount. And so that would be a net of these two numbers here, 1 million minus 10,000. So our carrying value is 990,000. And then we calculated our cash paid to retire the bonds. That's the 975,000. So we are paying to retire the bonds, we're paying less than the actual carrying value. So if the carrying value is more than the cash, then there's a gain. So we kind of got a deal here because we have a gain because we're paying, the carrying value is actually more than what we're going to have to pay. So this is called a gain on the early redemption of bonds. If we take the difference here, we'll see that. So make sure that you memorize this too. You also need to memorize this formula in this table here. If it was a loss, you would put loss on early redemption of bonds. So here's a little hint down here. If the carrying value is less than the cash we paid out, we would have a loss on the early redemption of bonds. Okay, and you may be asked to journalize the redemption of the bond. So over here, you would debit bonds payable because after this transaction, you will no longer owe them the money for the carrying value of the bonds payable. And not the carrying value, I meant to say debit the bonds payable for the face amount. It's always the face value of the bond. And remember, we have a discount balance of $10,000. Discounts have a normal debit balance, so to get rid of it, we are going to credit the discount for the amount, the balance of the discount for $10,000. And then we need to credit cash for the amount that we paid this off for, which we calculated. It was $975,000. And then the gain that we calculated on the early redemption of the bond for $15,000. And then we need to total up our debits and make sure that they balance. So our total debits are $1 million. And then let's total our credits. And they are $1 million, so we are in balance. So you want to remember how to calculate it like we did on the left side, but you also want to know how to put it into a journal entry. Let's quickly talk about where these accounts would show up on the balance sheet. Show up on the financial statements. Bonds payable and discounts would both show up on the balance sheet. And these two accounts would be right beside each other. It would be bonds payable, and then right up under it would be minus the discount. Of course, we know where cash is on the balance sheet, and gain on early redemption of bonds would be on the income statement under other gains and losses. So the first three would be on the balance sheet, and the last one would be on the income statement under other revenue and losses.